Hello everyone. Yesterday, RBI cut the interest rate more than most analysts expected, 50 basis point. So let's discuss about those details first, like what its influence and why banking stocks cheered for this, and then we'll discuss our regular weekly wrap and week ahead. First of all, for the whole present financial year FY 2026, from earlier 4%, RBI reduced the India's consumer inflation projection to 3.7%. And they said that's their justification for this bigger 50 basis point rate cut, and hence now India's repo rate is just 5.5%. 3 months ago, it was 6.5%, so 1% repo rate reduction in very quick succession. Obviously, lower interest rate is very good for wider economy as it increases the liquidity in the system, particularly good for auto sector, FMCG, infrastructure, IT and clean energy, since the loans will become cheaper, no doubt about it. However, the interest rate cut alone, it's bad for the banking stocks as it compresses the net interest margin, which all in detail we discussed in the last video. Then you might ask me, if it's negative, then why yesterday Bank Nifty outperformed Nifty? The answer to that is, again, it's RBI. In order to compensate the net interest margin compression in the banking stocks because of the interest rate cut, RBI reduced the CRR, cash reserve ratio, to just 3% from earlier 4%. I mean, in the Indian history, this is the second time RBI reduced the CRR to this low, earlier during COVID time for 6 months and now again. This CRR reduction expects to free up the bank's deposit up to 2.5 lakh crore rupees, and this free up capital expects to increase the net profit of the respective bank. If required, please pause and have a look. I compiled this table based on the FY 2025 data. Let's take HDFC Bank as an example. At the end of FY 2025, they had the deposit of 27 lakh crore rupees. Now, because of this CRR reduction in the HDFC Bank, it expects to free up 27,150 crore rupees, and that for the next financial year expects to increase the profit after tax by approximately 2%. In case of public sector banks, it's even more beneficial as they held large amounts as CRR. Anyway, these are the potential benefits for the top 4 banks because of the CRR reduction, and that's the reason yesterday Bank Nifty outperformed Nifty. That said, this is what I want to convey about the RBI interest rate decision. Now, coming to our regular stuff, if required, please pause and have a look. This is the brief Nifty and Bank Nifty price action on the last week. Finally, both Nifty and Bank Nifty started to move together after quite some time, and both had a good week. I mean, before Monday during weekend, there were a lot of mixed news. Indian government released very good growth GDP number on the last quarter. However, internationally, Trump threatened to increase the steel and aluminum tariff to 50% from the present 25%. And also he accused China for not following the US trade agreement regarding the rare earth metals export restrictions, which in turn made the Nifty to drop slightly but not the Bank Nifty. Then Tuesday, all these Trump threat and worries increased the US Treasury yield. In addition to that, Sensex expiry together crashed the Nifty all the way down to near 24,500 from 24,750. Here, one more thing, on that day, Adani stocks were the major draggers because of the new US probe regarding Adani Group companies importing LPG from Iran, which Adani Group denied any wrongdoing. Following, on Wednesday, Trump administration made the announcement that US President and Chinese President is going to have the telephonic conversation for the issue regarding the rare earth metal export restrictions, which market took that as positive. So both Nifty and Bank Nifty increased, and overall also 12 out of 13 sectors closed on the positive note. Then Thursday, Nifty weekly expiry day, JP Morgan increased the Reliance Industries rating as overweight and the price target to 1,568 rupees per share from 1,530 rupees per share, which is the first positive. In addition, expectation of rate cut on the next day made the Nifty to claim back 24,750 mark. Finally, on Friday, as we discussed earlier, most analysts were expecting a rate cut of 25 basis point, and some do mentioned about 50 basis point cut as inflation was below 4% consistent in the last 3 months. So yesterday at 10 AM, RBI did the 50 basis point interest rate cut to 5.5%. which market took that as super positive. So Bank Nifty rallied 800 points and Nifty increased 250 points. Hence, in the end, on the weekly basis, for the third consecutive week in a row, Bank Nifty closed on the positive side, up 830 points or 1.5%. Whereas on the other hand, Nifty snapped its 2 weeks downturn and closed positive of 1% or 252 points. Sensex wise, it was up by 0.9%. Then about institution, on Wednesday and Friday, FII net bought for roughly 1000 crore rupees each day, but all other 3 days they were net sellers. Especially Monday and Tuesday, FII net sold for more than 5000 crore rupees. So weekly basis, they net sold for 3500 crore rupees. Then in case of DII, all the 5 days, they were significantly net buyers. Especially Friday, they net bought for 9350 crore rupees. Overall in the week, DII net bought for 25500 crore rupees. Moving on, in addition to these events, on Monday night, Trump administration asked some of the major global countries, including India, to submit their best trade deal offers they can give to US by Wednesday. However, after Wednesday, no information about any countries submitting any offers. European Union declined that they haven't received any letter from US as yet. So any info or progress about this will potentially influence the market next week. Then on Thursday night, there was a serious spat online war between US President and Elon Musk, which again we discussed in detail in the last video. So we need to look out any development in this area on the weekend. Since as I said in the last video, this could potentially might influence Indian government stance about the satellite spectrum allocation rules as well as future India's electric vehicle import policy. Then the final global geopolitics, as far as I know, that could influence our Indian market, especially the auto stocks, is about the development across the Chinese magnet export restrictions. Since already there was a news that Suzuki kind of halted the Swift production due to the no resource availability. Other than this, about macro next week, first on Monday, early morning before our market opening, Japan's GDP and related data, then Chinese consumer inflation for May month and China's import-export data are scheduled to release. I mean, generally, Chinese trade data is not that important as far as our market is concerned, but global market is kind of keen now to look for it, especially after all this US high tariff and restriction on the May month. And this I don't think I could able to cover in the pre-market video on Monday, but potentially all these Japan and Chinese macro could potentially influence the global momentum along with the tonight's US jobs data, which is yet to release at the time of this my video making. Anyway, on the night, US New York Fed inflation expectation is scheduled to release. Then on Tuesday, nothing on early morning that I could think of, whereas on 11:30 am, UK unemployment rate is due, and in the night for US, EIA short-term energy outlook are the things we need to look out. On Wednesday, June 11th, no macro I could think of in early morning or during our market time could influence our market. But in the night for US, very important May month consumer inflation, both core and headline CPI data, crude oil inventories, another very important 10-year note auction and federal budget balance are the important things. Coming to Thursday, June 12th, Nifty weekly expiry day. During our market time, not the major one, but some minor ones like UK GDP growth rate, UK industrial production data are due at that time. But after that at 4 p.m, India's consumer inflation for May month is scheduled to release. For now, market expecting anything below 4%. If it comes, then it's the 4th consecutive week below RBI's target. And we can see its influence on the following trading session. Then in the night for US, weekly jobs data, wholesale inflation, Fed balance sheet, and the important one for the present date is 30-year note auction. Especially after this US House of Representatives approving the Trump's Big Beautiful Bill, since it will reflect what investors were thinking about the bill. And finally on Friday, during our market time in the afternoon, Germany, France and Italy consumer inflation is due, and in the aftermarket hours, India's trade data and Europe's trade data is due. Then in the night, Michigan consumer inflation expectation for 1 year, 5 year, etc. are all the important things we need to keep tab this week. Just repeating the important things, May month US consumer inflation on Wednesday night, then on Thursday after market hours, India's consumer inflation, and Thursday night 30-year note auction are the important major macros expect to influence the Indian market and global momentum this week. Whereas India's trade data and Michigan consumer future inflation expectation on coming Friday release will be released after our Indian market close. So no influence on the upcoming week. Rather, we can expect it will influence on the following week. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.